So, hello everyone. Thank you for being here. So, good morning or good afternoon or good evening, wherever you are watching this. Today's date is March 16th, 2023. And today is a little PowerPoint presentation on what an IUL is and why you should maybe consider having one. That I'd like to present to everybody: are you well protected? Who are we? We are a team of agents dedicated to educating families and employers and entrepreneurs on the benefits of advanced markets to facilitate tax-free wealth while protecting what matters most. We're partnered with Quility, Symmetry Financial Group. On the bottom of the screen, you see a whole bunch of carriers listed. Those are just a few among the 62 companies that we represent. A little bit about me. Pretty much I'm an entrepreneur since birth. I majored in business education. I got a bachelor's in physical education, so I was a teacher for 20 years. Later in life, I became a real estate agent and then real estate broker. Okay, so what do we do? So our insurance license allows us to help you in several different areas. So the first category is just typical life insurance, which includes accidental death, mortgage protection, term, whole life, and final expense. So if you're in need of any of those things, we can help you with that. But today, we're going to concentrate on the column to the right. And that is our advanced market products. It has to do with asset management and wealth strategies. These programs that we have to help with this is debt-free life. We have annuities available, the Index Universal Life that you're going to learn today. You can learn about mortgage acceleration, and we have Smart Start programs for children 1 to 18 years old. All right, so Index Universal Life, where did it begin? So a little bit about the evolution of life insurance. Originally, historically, you were just getting a policy that covered to help your family in case you died. And that was just term protection. Then in the 50s, whole life was born, and a lot of people got into whole life policies because it had some additional benefits besides the death benefit. It had some actual cash value. And then in 1979, the universal life was born, and there, then came flexibility with that era. In 1986, the variable universal life came out, and then the IUL has been around since 1997. If you look at the right-hand side, Transamerica was one of the first companies that offered it, but 24 years later, we have 52 other companies also promoting this wonderful product that's called Index Universal Life. All right, so what is Index Universal Life? And so I'm just going to horn in on the four major benefits. So first and foremost, it provides a death benefit like all life insurance policies. The difference is that this one also provides a buildup of cash inside the policy. The cash is not exposed to market risk and can be accessed tax-free and is liquid. So for these reasons, a lot of times I think an insurance policy is more powerful than a real estate asset, because a real estate asset is not liquid. And this policy is. And the next thing is, an IUL is not for everyone. There must be an individual with insurable interest that qualifies for an insurance policy. Factors that can impact can be health, prescription history, and background check. Some of the key benefits are, again, the protection and the accumulation. You have lifetime coverage. You have building savings with compounding interest in your favor as you sleep. You have living benefits. You have access to your money tax-free. You don't pay capital gain on the growth. And above all, you have flexibility. Okay, so how does an IUL work? Number one, you make a premium payment. Then number two, it's an accumulated policy value, meaning that it grows. You have options to go fixed or index, a fixed account or an indexed account. And basically, the third option that you have is once you put this money in, you have the right to make withdrawals and loans. And number 4, it has a death benefit. All right, so what does Index Universal Life actually do? So when you qualify for an IUL, you're getting permanent coverage, meaning forever, as long as premiums are paid. This is a life insurance policy with a death benefit, which is paid out to your named beneficiary or beneficiaries when you pass away. It can include living benefits in the case of critical illness, heart attack, cancer, chronic illness, or terminal illness. And this is preparing for the unexpected. Just want to throw here for a moment that everybody that's watching this, if you're not elderly already, one day you will be. And this is important to consider because almost everybody gets something in their 60s, whether it's cancer, a stroke, diabetes, all these different illnesses. So this is a way to protect yourself for that moment. God forbid, you did have illness. All right, index examples of an index. So we use, I'm sure some people might have never heard of it, but there's the S&P 500. So that's where the Index Universal Life policy, where we put the program in place. I'm just going to read here just a few highlights. So it's widely regarded as the best single benchmark of the United States. The S&P 500 index includes 500 large cap common stocks actively traded in the United States. The Barclays Trailblazer Section 5 index aims to track a diversified portfolio of assets with the highest return potential for a given level of risk, with the ability to change its portfolio as often daily to adapt to shifting market conditions. The cash value in an Index Universal Life policy earns money based on the performance of a selected stock index, but with a built-in floor, protecting you from market downturns, and a cap, which is the highest interest rate the account can earn. If you guys know Warren Buffett, I love listening to his stuff on YouTube. He says, rule number 1, never lose money. And then number 2, never forget rule number 1. So this is just an example of caps and floors avoiding the stock market. This is just a little quick example. Basically, if you had $100,000 in your stock account and the stock market dropped 15%, that means you would have $85,000. If you had that same amount in cash value in an IUL and the index dropped 15%, you would still have the $100,000, meaning no loss. But here's really the best part. In our example, let's say that same index grows 15% the next year. In the original stock account, basically you would have the 85,000 plus the interest of the 15,000, which is 97,750, which is less than what you started with. And with the other scenario with no loss, you're at 100,000, you didn't have any loss. So that 15,000, that 15% would mean you would have a value of 115,000. So that's one example of the power of the floor, which prevents you from losing money. And more important, losing time trying to regain your losses whenever the market drops. Okay, next slide. This is an example of the history of kind of the stock market, S&P 500. So if you look back to 2000, it's showing you one that was not steady. And if you see didn't have a floor, the one in the red and the one in the blue demonstrates what we have to offer, which is guaranteed no loss. And if you look at it all the way to the right, you'll see how the interest rate has been as high as 12% with no losses whatsoever. On this next slide, I just want to give an example. I don't know where you are saving money right at this moment in your life, but let's just use an example of $250 a month. So if you had $250 a month that you were storing somewhere, let's just pretend you're putting it under your mattress. Some people actually still do that. So $250 a month for a total of 40 years. that would be $120,000 cash under your mattress. Or let's say you put it in a high yield savings account, and let's pretend you're getting at least 2% on that money for 2 years. I mean, for 40 years. That would mean at the end of that 40-year period, you have 183,000. So your money did grow a little bit there. But traditional bank accounts don't give you the best interest rates that you can get. So let's use another way people save and try to invest and build an asset. So people often will invest in real estate, a house or land. So let's just say in this case, it's a house, and they've been paying the $250 a month for 40 years. That would mean 274,000 was what would accumulate. So that's double the amount of under the mattress. Then you have the last category. This is you putting your money in an index universal life, which is very, very safe, and with a return of 10.7%. That comes out to over $1,686,016 actually. So they say numbers speak out loud. I hope this speaks to you in terms of where you're putting your money every month and why you should consider the IUL. Next slide. Okay, so why it works. So think of it like a Roth IRA married to a life insurance policy. We are taking advantage of the Section 7702 of the IRS Code 2 to do the following. 1, overfund a life insurance contract with the ability to withdraw tax-free wealth. It's a life insurance policy loan, isn't taxable. So a loan is not taxable. All the while, the principal amount earns interest, which equals leverage. Enjoy the best of both worlds. Provide a death benefit and provide tax-free savings and retirement. So there's a rule called IRS Rule 7702. Many people don't know about it, and that's why many people do not take advantage of it. But see, here are some of the highlights. So the 7702, one of the most important things that it does, it saves you on taxes. It allows you to get tax-free benefits. So here we go. So number 1, differentiate between income from a genuine insurance product and income from an investment vehicle. The proceeds of a true life insurance contract receive favorable tax treatment. In addition to a death benefit that typically passes tax-free, the cash value of permanent life insurance grows tax deferred and will never be taxed so long as it stays in the policy. The key advantage here is that you can borrow against the cash value tax-free, and the funds can be used for any purpose and paid back whenever you decide. Plus, a life insurance policy loan has relatively low interest rates. Anything you do not repay is simply subtracted from the death benefit upon the insured's passing. So there you have it. You have one of the greatest secrets that exist right now. What you do with this information is definitely up to you. But with the power of the IUL, you have the power to leverage your money. You have the power to create a legacy for your family. Gonna go on to the next slide here. So they say a lot of people in America, these are just some statistics, 1 in 3 Americans has 0 saved for retirement. 1 in 3. Is that you? And if it is, what are you gonna do about it? Everybody's grandmother or mother should have told them that they should save for a rainy day. And the question is, did you prepare for whatever could happen in this life? Insurance, another name for insurance should just be cash policy, because that's the power that you have here. Right now, look at this chart and you'll see 33% no retirement savings, 23% less than 10%. 10% of the United States have 10,000 to 49,000. So as I go through this chart, you know, I can't see you or hear you, but if you are in the red zone, definitely give us a call and let us change the trajectory of your life and your money and help you secure your retirement while providing financial freedom by having access to money to invest in real estate. Because remember, you can use the money for any purpose. To fund your kids' college, you can use it to buy a car, you can use it to invest in real estate, which is what I'm trying to teach people. So historically, IUL for tax-free savings and retirement is not how much money you make, but how much money you get to keep, how hard it works for you, and how many generations you keep it for. That's Robert Kiyosaki. So if you look at this chart in terms of the safety, where is the safest place for your money? I would say in a place that has zero possibility of loss. And this is a chart showing just the last a couple of decades. So in 1929, there was the Wall Street crash. 1987 was the Black Monday crash. The dot-com bubble was the 99 to 2000 crash. Then in 2008, we had the mortgage crisis. And then in 2020, we had the coronavirus crash. And a lot of people were caught with their pants down. And because of 2020, a lot of people are aware that, you know what, the best thing that you can do is insure every member of your family, including your dog. We are concluding this presentation. I just want to go over some advantages if you're someone who has money in a 401k. These are some advantages and disadvantages of having your money in an IUL or a 401k. So if you look out here on the left, this is everything that you can do, and we'll talk now 401k, what you can't do. So 401k does grow and has some compound interest, but the IUL is like compound interest on steroids. Downsides: protection against market loss. The 401k does not have that. I know some people that have lost a lot of money. We have tax-free benefits with the IUL. The 401k, you don't. You have tax-free distribution retirement income with the IUL. With the 401, you can't. You have some rules with the 401ks, a 59.5-year-old rule. The IUL does not have that rule. Guaranteed minimum returns. The money you put in here, it's predictable on how it's going to grow. We guarantee no losses. 401 does not give you that. The IUL has living benefits. The 401k does not. You have leverage and access to cash value with the IUL, but the 401k you do not. So one of the most powerful things that I could leave you with is, if you have a 401k, there's a lot of them that have a lot of restrictions, and maybe you might not be able to pull out your money. But when you keep putting the money, what bucket are you putting your money into? So knowing all these facts right now at this moment, let's just pretend you have one. I'm going to encourage you to, to do a review and make sure you know everything there is to know about your policy. And as far as more money, when you keep pumping money into the 401k, that does not have the power of the IUL. So again, we're coming to a conclusion here. I'm looking at the right here just to show you who is this IUL good for. You can start one as young as 1 year old, and they say 50 years old is the cutoff, unless the person at 50 is going to be putting favorable or big amount of money, because now they only have 15 years to save between 50 and 65. Okay, so in conclusion of this, did you know there's 2 stories that I love to share with others, and on this list, I'm going to jump to Walt Disney. So when Walt Disney wanted to do his theme park, every bank in America and the United States told him no, because he talked about roller coasters. He talked about fires and people going, animals, zoos, all the bank sold liability, liability, liability. So no one was ever going to give him a loan. So fortunately, he had a cash accumulation policy that he started when he was young. He pulled out his entire policy. And I don't know if whether he, as far as whether he terminated the policy, but basically with that policy, he started Walt Disney. And that is a true story. Another true story is Ray Kroc. I love this story. I don't know if you guys seen the movie on Netflix, but it's pretty good. It's an eye opener. So Ray Kroc was a serial entrepreneur. The McDonald brothers already had a few successful McDonald establishments, and Ray Kroc, helped them open a whole bunch more. And he saw one all over the United States and all over the world. The two brothers did not. So they felt like they already had enough with like 10 McDonald's, and this guy was seeing 1,000 of them. So the point is, Ray Kroc also told them that they should buy the land underneath the McDonald's instead of leasing. They thought he was crazy. They fired him. I said he was a serial entrepreneur, so he tried many different businesses that didn't work. He could not get a loan from any bank in America either. So what did he do? He liquidated his cash accumulation policy, and he bought the land underneath all the McDonald's, and he forced the McDonald's brothers to sell them the McDonald's. And that is the McDonald's story. I hope you guys enjoyed this presentation. My name is Michelle Reyes. I'm here based in Miami, Florida, but thank God we are able to do this business via Zoom, and we could do an intake. It's about 7 to 15 minutes on the phone to confirm what your goals are and see if we can possibly help you. Thank you for being here again. Bye.